Some calm has come back to financial markets this morning.
Marketplace Morning Report is supported by Amazon Business, committed to business buying solutions to empower leaders to streamline and focus on growth. Learn more about smart business buying at amazonbusiness.com.
I'm David Brancaccio in Los Angeles. Stock prices are higher this morning after a three-day sell-off that wiped out trillions of dollars in value on Wall Street amid concerns tariffs or attacks that could slow consumption and eat into the profits that drive stock prices. Now, a senior figure in the Trump administration is emphasizing negotiations to come, suggesting tariffs aren't a kind of infrastructure that's being built to last. And some market players are latching onto that theme. Marketplace's Nova Safo is here with more.
Yeah, David, we heard from Treasury Secretary Scott Bessent earlier this morning, and he suggested that negotiations were always part of the tariff plan. Now, you can take that as you will, because among the criticisms from many over the last few weeks has been the Trump administration's multiple stated reasonings and goals for its tariff policies. But this morning on CNBC, Bessent said the White House has gotten overtures from some 70 countries, and last night, officials were drawing up a priority list for negotiations.
There's going to be a lot of back and forth. President Trump is going to be personally involved in the negotiations, and we will see what our trading partners offer.
Now, there was still some mixed messaging, though, from Bessent. He said the results of the negotiations with each country could still include some tariffs staying on.
Now, after surges downward on markets, sometimes prices bounce as investors try to buy the dip, thinking they're seeing bargains. And since the tariffs were unveiled last week, Nova, there have been shocking swerves. You and I, yesterday, watching as market players latched on for a moment to a false report that tariffs might be paused. Nope, said the White House. And we saw it play out.
We did, and it was a sight to behold. Some of the worst market volatility on record. $2.5 trillion went in and out of stocks within minutes, according to the Wall Street Journal's calculations. And David, we could see more volatility. We're entering earnings season, and Wall Street will be listening to what corporate leaders have to say about tariffs and how they may impact their businesses going forward. And that, in turn, could impact where stocks go next.
Yes, and the volatility index is down this morning. S&P futures are up 2.4% now. Dow futures up more than 1,000 points, 2.8%. NASDAQ futures up 2.3%. Staying with stocks, Japan's Nikkei stock index went up 6% today. London up 2.5% now. Hong Kong up 1.5%. This even with the U.S.-China trade tensions escalating. Here's Marketplace's Jennifer Pak in Shanghai.
Shares in Japan ended higher on hopes that the Japanese will get priority in trade talks with the Trump administration and avoid a blanket tariff of 24% on Japan's exports, while China is the first in the region to retaliate against Trump's additional tariffs, an extra 34% on all American exports. If China does not withdraw these tariffs, says President Trump, there will be even more. So, reminder, on Wednesday, the U.S. will levy extra tariffs on Chinese exports totaling 54%. President Trump says he could add another 50% on top. The Chinese Commerce Ministry calls this threat blackmail, while the Foreign Ministry says if the U.S. insists on waging a tariff and trade war, China will fight to the end. In Shanghai, I'm Jennifer Pak for Marketplace.
Marketplace Morning Report is supported by Bank of America. From local shops to global enterprises, Bank of America is committed to helping businesses of all sizes make every move matter. Learn more at bankofamerica.com/bankingforbusiness. And by Palo Alto Networks. Palo Alto Networks delivers what's next in cybersecurity innovation to protect today's digital way of life. Learn more at paloaltonetworks.com.
As U.S. consumers think about buying items they expect to get much more expensive as President Trump's import taxes take hold, could be smartphones, coffee, entire cars and trucks. One price going down is the wholesale price of crude oil. This morning at around $61 a barrel, down where it was in the second pandemic year, 2021, when people weren't traveling much. Low wholesale prices can thwart the president's intention to increase domestic oil output. Marketplace's Kaylee Wells explains.
Just like any commodity in the market, there's a supply side and a demand side. The oil demand is responding like it would during any economic downturn.
On the demand side, the tariffs and recession fears, et cetera, show a weaker economy, and that means suppressed demand for oil.
Morgan Bazilian directs the Payne Institute for Public Policy at the Colorado School of Mines. He says lower demand usually means suppliers cut back supply. That makes the response this time more puzzling.
OPEC Plus said they were going to increase production, and that also suppresses prices.
It sounds counterintuitive, but Hugh Daigle, who teaches petroleum engineering at the University of Texas at Austin, says as other producers decrease supply, if OPEC Plus increases supply, then they can gain market share.
Because every time the price of oil goes up, but they don't take advantage of that by increasing the amount that they're producing, other people will make up the slack for the demand that's implied by that increase in prices,
which decreases their market share over time. So Daigle says this is an opportunity to up production and claw that market share back. It's good news for Trump's campaign promise to lower oil prices. It's not good news for his other goal of increasing domestic oil production.
There's not a lot of room for those extra barrels. Nobody really wants them.
Domestic oil producers already have faced thin margins recently. They need prices above $60 per barrel to profitably drill a new well, says energy economist Mark Finley with Rice University. And we fell to $60 this week.
What the administration's response to oil producers domestically has been is, don't worry, lower oil prices will be offset by easier regulation.
He says the hope of the Trump administration was to have lower prices and increase domestic production. But
it's hard to see how less regulation can completely offset the decline of lower oil prices.
Finley says decreased regulation could increase profits for companies anywhere from $2 to $4 a barrel. But by the beginning of this week, crude oil prices have already fallen by $10. I'm Kaylee Wells for Marketplace.
Kaylee was focused there on wholesale oil prices. Using AAA's retail calculation, gas prices at the pump are actually higher than they were a week ago and a month ago. And the conservative American Enterprise Institute has found what it thinks is a whopping math error in the way the Trump administration calculated how to apply reciprocal tariffs on individual countries, an apparent error that exaggerated tariff rates by as much as 4 times. In Los Angeles, I'm David Brancaccio, Marketplace Morning Report. From APM, American Public Media.